Hey everyone, it is Julie here with TipRanks. Welcome to our very first episode of Analyze This, where we'll be chatting with some of the smartest minds on Wall Street. Today we had the opportunity and pleasure of talking with Daniel Ives, a managing director and senior equity research analyst at Wedbush. We'll be chatting about current market conditions, the disruptive tech sector, including Tesla, and Dan's advice to investors. So let's check it out. Perfect. Well, Dan, thank you so much for joining me today. I really appreciate you chatting with us. You are well known in the industry and a five-star analyst on TipRanks. So we always love getting insight from experts like you. Now, I know you've been working with Wedbush for a few years now, but have a couple decades of experience in the industry. So I would just love to hear a bit of your background and what led you to your current position.
Yeah, I mean, look, covering tech stocks really since the dot-com bubble and burst. I mean, my passion's always really been in the technology industry. And, ultimately in terms of covering stocks, start off cybersecurity software and then ultimately transition to disruptive tech, Apple and broader tech. And I mean, my view, especially being an analyst on Wall Street, I think you have to have a passion for the stocks you cover.
Sure.
Because I think if you don't, I think you lose something. And I think, we just truly enjoy hand holding investors, especially look, I mean, through ups, but obviously what we're going through now in terms of downs. And it's definitely a roller coaster ride. But I think, ultimately with sound fundamental analysis and trying to pick the winners, I think that's the best way to navigate, especially periods like this.
Absolutely. And that kind of ties us into our next question with market conditions. The last few years have been quite unique with COVID, and now 2022 has been rough, to say the least, a lot of red. Has that changed how you've approached your analyzing of stocks at all?
Yeah, I mean, look, it's been a brutal year, to date. And in a lot of ways, like reminds me of 08, 09. I mean, maybe some semblance in terms of parallels to maybe 2001, when I saw back then 2002, just in terms of risk being basically thrown out the window,
Mm.
Regardless of price. And I mean, my view is that, okay, clearly you had a massive pull forward during COVID in terms of tech stocks. Growth is starting to normalize. You clearly have, it looks like some sort of recession on the way. And I think you're seeing multiples compress significantly. Look, our view is that you cannot necessarily put them all into the same group. I think it's a bifurcation of tech. I think there's names in enterprise, specifically software, cybersecurity, some of the stalwart names like Apple, Microsoft. If you're willing to navigate the storm, I think these are stocks that are significant, what I view as risk rewards relative to the next 12, 18 months. I think, and that's our view in terms of how we sort of navigate this period.
Absolutely. That would kind of tie in as well. What advice you would give investors for this upcoming year and how to navigate these markets?
I think it's especially going to June earnings. I think June earnings, you clearly could see numbers lowered across the board. But I don't necessarily view that as bad. And I think that some of that is maybe clearing of the decks in terms of, I think some of these stocks need to, I almost call it in terms of numbers coming down, because I think a lot of institutional investors won't buy tech stocks, so they feel that numbers have sort of bottom. And I think it's also really starting to look at 2023 numbers. But that's why I go back to like the stress test sectors in software and cybersecurity, stalwarts like Apple, Microsoft, among others. I think these are ones, it's very easy just to yell fire in a crowded theater, but I think there's opportunities in the carnage.
Absolutely. And you did mention disruptive tech companies too. And especially during COVID, we saw some of these companies come out with a bang. We had a lot of SPACs even with some of these startups, and they were on a tear and have now come crashing down quite a bit, these higher growth, newer tech companies. How do you think they'll survive this coming year? What's going to make those standouts really flourish in the coming years versus the ones that won't make it?
Yeah, I mean, look, the froth is clearly going to come off, and it already has. I mean, some won't survive, and I think we've already seen that. But but it goes back to you can't just paint every company with the same brush. I mean, I know there's companies like let's just talk about some like disruptive tech names where basically I think investors have just almost disregarded in terms of the fundamental growth names like Planet Labs, Exos, Wejo. I mean, Wejo disruptive in terms of the automotive industry, Planet in terms of space technology, in terms of satellite perspective, what's happening on the big data, and then you look at Exos, commercial EV player. That's not going away. More and more conversion to fleets, FedEx and others as they sort of go down that path. So it's just a good example that as we kind of go through this bifurcation of tech and risk off, you can't put every company in the same bucket. And that's why I think you just have to identify the winners and the ways to sort of navigate this period.
Sure. Within your sector, then, are there a few that you would deem potential winners or certain ones that you're most excited about?
I think specifically cybersecurity. I mean, that's the one I kind of put an asterisk around, just given what we see on the levels of threats, the shift to cloud, still only 40% have moved to the cloud to where we are today. And then there's names like, I look at names like CyberArk, Fortinet, Palo Alto, Zscaler in terms of another name that protects the cloud. Of course, CrowdStrike as well. And I also think in cybersecurity, it's going to be M&A. And I think we've seen that SailPoint, among others, saw Proofpoint and some other deals out there. But I think it's just tip of the iceberg in terms of M&A strategics as well as financials, potentially going after, cyber deals with a lot of dry powder on the sidelines.
Sure, yeah, and a lot of M&A targets lately, especially with how the market's been as well. Now, shifting over more to the electric vehicle world, I can't chat with you without talking about Tesla. You were one of the earlier bulls. I know you've been covering them for several years, and I know we downgraded price targets slightly back in May from the 1,400 to 1,000. But what I've always loved on Tesla, watching it on TipRanks, is how divided analysts are on this stock. We have people with price targets down in $60. We have high-end price targets near 1,600. The gap is always immense. So I would love to kind of back up and just hear what in the early days kind of really attracted you to Tesla, and then moving forward, how you see them emerging from this next year and what's ahead.
I think if you go back a decade ago in Tesla, as one of the early believers, and there's many that thought they'd never be able to get to scale. Because I think for any automaker, outside the likes, of course, of a GM, a Ford, a VW established, I think many of you, like the business model was upside down. Mm-hmm. And Musk was not going to be able to ultimately profitably get there. And that's essentially what's happened to where we are today. I think, look, no one, including myself, could have ever anticipated it was going to be a global phenomenon like it is today. Sure. I think a lot of that is related to Musk, the brand, obviously the major shift to EVs. And I think, our view has always been, it's not an auto company, it's a disruptive technology player. Mm-hmm. Now, but then going to that point, part of why it's such like an emotional bull bear story, because many of us will just compare it to Toyota or traditional auto companies, and they just don't understand it. But again, that's what makes a market. I mean, my view is that it's the software ecosystem that Tesla ultimately navigates. If you look at their gross margin profile, you look at their what I view the profitability ramp, especially over the coming years. I think that's really what separates Tesla. And from a price target perspective, I mean, we've had to lower because of zero COVID. I mean, basically April and May was shut down months. Yeah. But I believe as we go into deliveries in June quarter, Street starts to look onto the other side of this. Look in 2023, I still think 2 million is the bogey going 2023. And then if that happens, I still think there's a 4-digit stock.
You can catch part 2 of this interview here on YouTube next week, or watch the full interview now, available on TipRanks TV. Follow the link down below.